Mohji, please start.
Yes, sir. Yes, sir. Good evening, everyone. Let us officially start this e-study circle meeting. It seems COVID has minimized and we are hoping for our physical meeting soon. I, being Secretary of DTBA, must thank everyone for our yesterday program at the Income Tax Office and welcome every member to this e-study circle meeting. This e-study circle meeting will be conducted under the able guidance of Senior Rajiv Kaushal with technical things carried out by our executive member Anshulji and me. Queries and question answer session will be taken up and controlled by our convener Rajiv Kaushal with the help of Gulshan Badbadi. Members can raise their queries in the chat box or by raise of hand. I would request our members that the queries, most of the queries will be taken after the speaker has completed his deliberation. But in case any member want that query to be taken at that time, please welcome. Subhash, formally welcoming our members. Sir, please.
Thank you, Mohiji. First of all, मेरा नमस्कार मेरे गुरु अश्विनी जी को नमस्कार. All my senior members, past presidents, past chairman of the Ludhiana branch, all other dignitaries who are office bearers of any ITCA, DBA or branch, and all the senior members and all the participants present here. Sanjeeva Narayan is my senior. He has been my senior at Ashwini and Associates. He's very learned. I have learned a lot from him. When I called him to share his knowledge, he just agreed that on whatever topic you want, I will be doing that. He said that. So I welcome you, Sanjeeva ji, or I welcome you all to be present here. I think this is going to be a very good sharing of knowledge because Sanjeeva ji is very thorough on this topic, and his knowledge I would say will benefit all of us. And I welcome you all on this day. Thank you very much. Mohiji, please carry on.
Thank you, sir. Sir, I would now like to invite our executive member Anshulji for formal introduction of our guest speaker.
Good evening, all present. It is a privilege to introduce the worthy speaker of the day, C.A. Sanjeeva Narayan ji. C.A. Sanjeeva Narayan ji is an alumni of Shri Ram College of Commerce and St. Xavier School, Delhi. He qualified in 1985 and has been a fellow member of the institute since 90. He is a senior partner of Ashwini and Associates and is responsible for managing the Delhi operation of the firm. He is self-driven and self-motivated chartered accountant with proven ability to develop and strengthen management team in order to maximize efficiency. He has been a central tax auditor of public sector banks and has been representing before the tax authorities. Presently, he is on board of various public and private sector companies. He has been working in various committees of the Institute of Chartered Accountants of India. He is also actively involved in social work and is part of various trusts which promote education and welfare of economically weak children, especially the girl child. Now, not taking much time, I will request the secretary to call the speaker of the day.
Actually, संजीव जी को जरा थोड़ा वो कहीं दूसरे उसमें स्लाइड में है, इसको आप आगे लेकर आओ. कैसे लेकर आएंगे?
Sir, he is in on the first slide only.
Okay.
पिन कर दिया जी.
पिन कर.
Sir, आप स्पीकर मोड ऑन कर लीजिए सर, so that फिर वो आ जाएंगे.
ठीक है.
Thank you, Anshulji, for introducing the guest speaker. Now I would like to hand over the e-mic to our guest speaker to enlighten our members. Sir.
Thank you, everybody. Am I audible? First of all,
yes, sir. Yes, sir.
In e-proceedings, that is most important. So thank you everybody for this engaging introduction and for giving me an opportunity to interact with all the members present here. I would request you to please allow me screen sharing before I move ahead.
Anshul, please do that.
Done, sir.
Yeah. So thank you very much once again. Thank you, Subhaji, and all the office bearers of the District Taxation Bar Association. The introduction, needless to say, was highly ill-deserved, but nevertheless, I take it as a compliment, and I'm happy to be here among our esteemed members. Before I start, I think it's customary these days to hope that all of us are safe and sound in the wake of the pandemic, which has engulfed all of us for the last 2 years, and hope that sooner or later, very soon, in fact, the collective might of the humanity would be able to overcome this virus, which, although noise-sized, has really shaken up the world and has been overreaching in its impact. Before I start, I may just like to say that I'm deeply humbled, in fact, highly humbled to be in the presence of such an august gathering of professionals who may be collectively a blend of both youth with this exuberance and enthusiasm and the wisdom of age would collectively represent more than a couple of 100 years of collective professional experience and endeavor. So I am really honored and privileged to be as a part of this gathering and to be able to interact with all of you. That being the case, I may only add that the topic of the day, which we will deliberate on later on, being very far-reaching in its impact, I maybe have somewhat limited experience in this area. I would request all my fellow colleagues present here to unhesitatingly and willingly at any point of time kindly interrupt me if they would be, if they have any query to raise, if there are any issues to be clarified, they would like to provide a new perspective to something which I have spoken about, or something which they differ from. For I think I really believe that it's disagreements that and it's engaging professional discussion that leads to enhancement of knowledge and to adopting a clear view. Having said that, the chosen topic of the day, which covers unexplained cash credit under Section 61, is quite relevant and topical in the present circumstances because it has been.
Sanjeevji, just a minute. Sanjeevji, whatever queries will be there, they will be put in the chat box only. Two of our senior members, Mr. Sanjeeva Kaushal and Mr. Gulshan Madhav, will be taking them up. If they need to be taken in between, they both will be regulating them, right? That I think that would be fine.
So fine. I thought, yeah, that'll be fine. That's the way the protocol works. So that'll be okay. So yeah. So the chosen topic of the day, that is unexplained cash credits, is quite topical and relevant in the sense that it has engaged the attention of the department to a feverish extent in the past couple of years. It has been the subject of intense professional debate and a lot of judicial activity, and a series of seemingly innocuous but actually far-reaching impact legislative changes. We'll go through them as we progress during the course of the discussion. I'll just start slideshow. The way in which this entire presentation has been structured, we'll be covering a series of about 17-18 topics. I hope I'm able to finish them in the time allotted to me. Starting with the concept of deemed incomes under the Act. You know, this I'll go through that in detail. Then we will go through the provisions of Section 68 and dissect what are the requirements for the provision of Section 68 to come into play. Then some basic issues which arise out of those various requirements, including books of accounts, etc., the burden of discharge of owners, the manner in which the various provisions come into play. Then what are the components of the onus under Section 68, including the identity, capacity, and genuineness of the transaction. I'm not delving into it in much detail here because I think we'll have enough time to talk about them later on. Then what is the departmental view to determine whether creditworthiness and genuineness and identity of the transaction is proved? Various judicial views on the discharge of onus. Something which has engaged which has which the department has been increasingly reliant upon in the recent past is the test of human probabilities, the preponderance of the evidence in the given case, as well as the distinction between form and substance of a transaction. These are various parameters which have been quite largely and widely used by the department in recent times to to resort to additions under section 68A. Then issue of how and when independent inquiries can be made by the assessing officer and the certain judicial precedents in connection therewith. Now, source of source is another issue. There has been earlier there was certain judicial view on the subject. Then the law was amended in section 2 by Finance Act 2012 in a certain limited manner to prove the source of source. And recently, the Finance Bill 2022 proposes to enlarge the scope of onus under section for source of source, proving source of source in a very drastic manner. The change seemingly innocuous, but it's going to have a very far-reaching impact. Then we'll discuss about specific provisions relating to taxability of unexplained tax credits and applicability of penal provisions, followed by some recent judicial pronouncements of interest and a specific reference to a judgment of the in Delhi High Court in the case of Action Global Private Limited. Just 1 minute. Yeah. Chapter 6, which is rather innocuously worded as aggregation of incomes, consists of 6 sections which cover what would be called as deemed incomes under the Income Tax Act. Now, these various items covering from section 68 to section 69D, which are listed out here, cover issues which, though strictly not in the part of income in the traditional and the more strict sense of the word, that is income arising out, income would definitely mean something arising out of a regular activity, a profession, a vocation, or some kind of an employment carried out, or from renting of goods or services, or enjoyment of capital or enjoyment of labor. So these kind incomes, cash credits, unexplained investments, strictly do not fall within the definition of income. They are so this family of 6 sections covers what would be called deemed incomes. So I may confess that when I was studying for my chartered accountancy and when I first read section 68 as unexplained cash credits deemed to be income, I was a bit stumped as to how can a credit appearing in the books of accounts deemed to be my income. But later on, when I entered the profession, I interacted with my seniors, learned from my colleagues. So I realized that these 6 sections are incorporated into the act basically with a view to ensure that unaccounted income earned by other than regular means is not brought to books of accounts by various let's say various not so acceptable methods, including by way of round tripping, by way of what department calls accommodation entries, which we as professionals always insist on our unsecured loans or share capital, but department has used a term, although nowhere defined in the act, accommodation entries from shell companies, etc. So these are the kind of incomes which strictly not in the definition of the tradition, the original definition of income are deemed to be incomes. Although I am not included here with section 222E, which also talks of deemed income in certain circumstances when loans are granted to associate concerns in a subject to certain conditions, so which are deemed to be income in the hands. A loan is deemed to be loan received is deemed to be income in the hands of the recipient. So these are the kind of incomes which fall into the category of deemed incomes. So although there are 6 sections dealing with various assets, but various issues, since all the items are fairly large and complex in nature, for the purpose of this presentation, we will only deal with section 68. which talks about unexplained tax credits which can be deemed to be income under circumstances and on the fulfillment of certain prescribed conditions. I have reproduced the provisions of section 68 here, and I've highlighted what would be the, the limbs that essentially make up the whole, that is section 68. So I've repeat the entire section verbatim, but I'll just mention to certain issues which I've highlighted. This section applies where any sum is found credited in the books of accounts of an assessee, which are maintained by him, for in respect of which he offers either no explanation or the explanation offered by him is not, in the opinion of the assessing officer, satisfactory. On the cumulative fulfillment of all these conditions, the assessing officer may, I'll delve on all these issues later on, may bring the set amount to charge as income of the assessee in that relevant previous year. Now, as already discussed earlier, the general principles are there should be books of accounts which are to be maintained by the assessee himself, not by any other person. The significance of that we shall soon see. There should be a credit entry in the books of accounts in the relevant period, and there should be the absence of a satisfactory explanation about the nature and source of the sum credited. Now, section 68 applies to, it does not offer any distinction with respect to the nature and purpose of the cash credit. So it could be share capital, it could be share premium, it could be share application money, it could be loans or borrowing from whatever source whatsoever, irrespective of whether it's from an institution, from personal borrowing, from friends, from relatives, from associates, or from all and sundry. So it applies without any exception to all kind of credit entries in the nature of cash credits. There is a dispute, a legal dispute, whether it could apply to creditors arising out of purchase of goods and services, in which case probably not section 68 but section 41(1) could come into play. So that is the all-encompassing nature of this section. It applying to all cash credits. Again, as we said earlier, there is it is implicit in this section, and of course a mandatory requirement of the principle of natural justice, that the assessing officer gives an opportunity of being heard to the assessee to enable him to either file provide an explanation with respect to the source of the amount of cash credit, before which the assessing officer has to mandatorily provide an opportunity to the assessee to explain the nature and source of the cash credit and provide all documentary evidence related to, and furnish any explanation that he may require before he can proceed to make any addition. Now, as I already mentioned earlier, the word is used in this section is may and not shall. So it does not make it mandatory, but it makes it discretionary on the part of the assessing officer to make an addition in the absence of an explanation or in the absence of a satisfactory explanation. Now, the Supreme Court, this matter has been confirmed, unequivocally held by the Supreme Court in the case of PK Noorjahan. Although I may just clarify here that judgment has been rendered in the context of section 69, not section 68. But the provisions being kind of similar and pari materia, I think that judgment would apply with equal force to while we are considering section 68. Again, as I mentioned, the addition of an amount under section 68 is incumbent upon either the assessee not providing an explanation or not providing a satisfactory explanation. But again, lack of a satisfactory explanation does not automatically lead to a deemed income. There can be, the explanation has to be dissected, understood, read in conjunction with the facts and circumstances of the case, so as to enable the deeming provision of section 68 to come into play. In this connection, I'd like to read verbatim certain relevant provisions, section excerpts from this judgment, which would further make this, this issue very clear. Whether an explanation is acceptable, and if not, whether it should be inferred that the receipts constitute income, are different aspects of the same question. Both these aspects are interrelated, and the question whether such receipts constitute income or not has to be decided, and I emphasize, on a consideration of all the relevant facts and circumstances of the case. It is quite legitimate that in the case of an SSE, who is known to be carrying on several activities of an income earning character, or who can reasonably be found to be involved in such activities, to draw the inference that the amounts found with him constitute income from undisclosed sources, in the absence of any satisfactory explanation regarding their source. But again, noted, such an inference should not be readily made in the case of a person who has no known source, business, or other source of income, or who cannot even be reasonably suspected as engaged in any income earning activity. There must be more substantial reasons to reject the SSE's explanation and draw the. So, although Supreme Court has laid down broad guidelines quite clearly as to the circumstances in which a lack of a satisfactory explanation does not automatically lead to income, the entire scenario would have to be viewed in the context of the exact circumstances of the case, and coupled with the fact that the power to make an addition is discretionary. It is powered by the use of the words may and not shall. So the evidence, even if found explanation, even if found unsatisfactory, has to be viewed in the context of the facts and circumstances of the case before resorting to any addition. The other issue is that Section 68 being a deeming provision, any addition made does not justify the imposition of penalty. The issue of levy of penalty is governed by an entirely different set of facts and circumstances. Till assessment year 17-18, in respect of these additions, Section 271(11)(c) would apply. So whether the addition made under Section 68 amounts to concealment or furnishing inaccurate particulars of income would have to be viewed in the facts and circumstances of the case, meaning thereby that in a case maybe where the SSC has been able to furnish enough documentary evidence to justify the source and the nature of the cash credit and reasonably discharge the onus under Section 68, merely because the assessing officer is not in agreement with the same and comes to an entirely different conclusion, ipso facto, the addition would not justify imposition of penalty, which is governed by an entire in Chandigarh bench of the Honorable ITAT. Now, again, I emphasized earlier, it is applicable to the year in which the cash credit is received, on not in any earlier year. I mean, why I've emphasized it, it seems to be a very clear-cut issue that the year in which cash credit is received in any form whatsoever, Section 68 would come into play earlier. But rather innocuously and maybe humorously at that, a couple of years ago, I found some people in the department proffering the view that this is applicable to the year in which the assessing officer finds that there was a credit. I mean, when he is going, I mean, we could talk of credit received in March 14, but when the case comes up for scrutiny, let us say it is March 16, he would say that I have found it today. So, it will be apply for assessment year 16-17. So this view was sought to be preferred. So which I had then that point of time I had done some research, so I had found this judgment. So it will be applicable only for the year in which the cash credit is received. This section applies not only to credits received in cash. Cash would include bank transfers, but also the other credits, maybe by way of contra entries, by way of book entries, wherein liabilities ought to be created. There again, the explanation would be hit by Section 68. But there is a very vital, kind of an exception to that, which is covered next. A credit can be brought to tax at only one point of time. That is when it is initially recorded in the books of accounts or received in any manner. a subsequent conversion of the nature of the same into any other form will not attract section 68. Meaning thereby, some money, a credit is generated by virtue of receiving some funds by way of a loan. And later on, a decision is made. I mean, whether other statutes or other procedural formalities are complied with is a different issue. But a decision is made to convert the said amount into share capital by after complying with all of the relevant provisions. So that will not amount to a fresh cash credit. The question of taxability would arise only when the initial credit was received at that point of time. The provision of section 68 will need to be complied with at that point of time, both as regards the assessee as well as the department. A lot of emphasis has been raised in this section on the credit entry in the books of accounts. This definition of books of accounts was inserted into the Act by Finance Act 2001, which was broadly amended. We initially thought of books of accounts to be manual cash credit, cash books, ledgers, journals, sales register, etc. But with the gradual proliferation and expansion and introduction of information technology, use of computer-based systems for accounting, programs such as Tally, and more use of software such as ERP and SAP, the legislature proactively extended the definition of books of accounts to include floppy disks, tapes, or any other electromagnetic data storage device. Now, books of accounts maintained by the assessee would definitely fall within the meaning of section of will be hit by section 68. But a passbook supplied by the bank is not a book which is maintained by the assessee. It is maintained by the bank or that relevant financial institution as a part of its statutory compliances, as a part of its procedures. So it cannot be a credit entry in the passbook supplied by the bank. It reflects a relation of a debtor and creditor between the depositor and the institution. It is not a fiduciary relationship of a trustee or a beneficiary. He is not maintaining that book on my behalf. So meaning thereby that credit entry in the passbook will not be hit by the provision of section 68. Whether it would be hit by, whether section 69 is an undisclosed investment is a separate issue, which can deliberate separately. But per se, it will not attract section 68. Again, something which I emphasized earlier, the books of accounts have to be of the assessee only. Where there is a credit entry in the books of the firm. Now, here a fine distinction somebody can seem to draw that a firm does not have a separate legal entity from the partners. It is the combined collective of the partners. So it is something which is an extension of the assessee himself. But nevertheless, for this purpose, a credit entry in the books of accounts of the firm will not lead to any addition in the hands of the partner. An addition can only be made in the hands of the firm. Of course, again, section 69 can come into play in the hand of the assessee. But for the same amount, there cannot be any double jeopardy. Addition can be made only once in respect of the same amount. So wherever either 69 in the hand of the assessee or 68 in the hand of the firm. Again, the same analogy extended further, where books of accounts of a firm show cash credit in the name of a partner. Now, critically, earlier there was a credit entry by any other name, but a credit entry in the name of the partner, and with respect to which no satisfactory explanation is offered, the amount of cash credit will be deemed to be income of the assessee firm by invoking the provision of section 68. In such a case, the credit entry in the name of the partner is akin to a credit entry in the name of any other person. So it is the firm's liability, the firm's responsibility, its obligation to kind of discharge the onus as required under section 68, provide all the relevant explanation, and then it will be absolved of its onus. But in the absence of that, in the absence or failure to do so, it will be an addition in the hands of the firm and not in the hand of the partner. Now, the section 68 casts an onus on the assessee. What are the components of the onus and what are the parameters to be fulfilled in this regard? We shall discuss later on. But who is to discharge an onus, in under what circumstances it is to be discharged, and what are the respective responsibilities or the duties of the assessee as well as the department in this regard? That is something which is which would be which is the subject of our next ensuing part of the presentation or discussion. It is the primary duty of the assessee to explain the nature and source of the credit entry in the books of accounts. The primary onus with respect to any credit entry lies on the assessee himself. If the meaning to say that when I have certain loans or share capital, it is my primary duty to discharge the obligation by fulfilling all the relevant documentary evidence, all the explanations that I can furnish reasonably and adequately, and no further. In case of my failure, in case I have fulfilled my primary duty, the assessing officer can put the AO to notice to provide further proof of his explanation. And if the assessee fails to tender further evidence, the assessing officer in justifying in rejecting the explanation. So, meaning thereby, once the assessee has discharged his primary burden, the onus shifts on the department to disprove its case. Now, assessee in such cases can ask the department first of all can ask assessee to go beyond his initial duty and go ahead, asking him to produce the relevant person or send inspectors, issue commissions, etc. But in case the assessee is unable for whatever reasons, the relationship with the cash creditor is also bound to affect in the compliance of asking the third party to appear before the department or the response to someone. That is a third party's entire call. He may or may not cooperate with the department. So in such cases, the assessing officer can suo moto inquire into the material and assessee can, subject to fulfillment of prescribed formalities, request the assessing officer to use the powers that are bestowed on him under the Act, including issue of summons under Section 131 to further bolster the stand of the assessee. Now, we talked about the burden cast on the assessee and how primary burden and the secondary burden with regard to the discharge of onus under Section 68. The various components of the onus, as as kind of concluded over a period of time by intense professional discussion and by a dissection and analysis of the judgments rendered by various courts of law, including the apex court from time to time. The onus is on the assessee to prove the identity, the capacity of the creditor, the capacity and the creditworthiness of the creditor to advance money, and the genuineness of the transaction. We'll discuss the components and the legal provisions, including the judicial pronouncements on each of these issues separately, and the view of the department from time to time. We'll go into that. But the critical point to be noticed is that all conditions are to be satisfied cumulatively and not separately. So the assessee is duty bound to prove the identity and the creditworthiness and the genuineness of the transaction. Of course, in certain cases, when you have been able to prove the identity and the creditworthiness, the question of genuineness kind of gets answered, coupled with the fact that the transaction has been consummated and taken place through various kind of genuine sources and in accordance with normal procedures. So the question of genuineness is kind of settled. It's related to the first two, but the fact remains that it is the assessee duty bound to discharge the onus with respect to all three to the satisfaction of the assessing officers. Now, talking about identity, very simple. It seems very simple. What is identity? When you start identifying what is identity and trying to define what is identity, it becomes a bit of a complex issue. So identity in this context would mean a defining characteristic or certain specific, particulars of that particular cash creditor, which are unique to that person concerned. For instance, in the case of an individual, it could be the all-pervasive Aadhaar card, his PAN card, passport, driving license, which are kind of unique, to the assessee concerned, which are unique to that person concerned. In case of the firm, in case of a company, it is a certificate of incorporation granted by the registrar of companies, giving it a separate legal and identity and bring it into existence as an artificial legal person, as a separate person. In case of a firm, it could be a partnership deed. Of course, not necessary to be registered, but if registered, well and good. If not, the partnership deed, which forms the basis for the issue of the PAN, could be the identity. In this regard, in case of any other issue, for example, a trust, it could be the trust deed, a society, a certificate of registration granted by the jurisdictional registrar of societies. That is something which gives it a unique and defining identity. Now, talking about identity and the department's view on this issue, I've seen a couple of assessment orders wherein they've kind of sought to discount some of the essential features. Like saying, for instance, PAN is granted as a matter of routine, so it does not give it an identity. Or certificate of incorporation is an identity, but fine, it's under a separate act. So given that, it somehow it is somewhat surprising that a PAN, which is issued after the due process, after furnishing all the relevant documents, including some kind of a KYC, why should the department be disputing the issuance of PAN as a defining identifier of identity? Coming to the next issue is the capacity or the creditworthiness of the cash creditor to deposit that money. Now, I don't want to say that cash creditworthiness would obviously refer to the ability to lend money, but it's dependent on various other factors and how it can be proved vis-a-vis the assessee. Now, it will essentially involve an analysis of the financial parameters, his balance sheet, his income tax returns, his audited financial statements, and of course, in case there are certain third-party credit assessment, including a credit rating by a recognized party, that would further go on to prove the creditworthiness of the party. Now, coming to one particular issue with respect to creditworthiness, the department invariably insists on the assessee filing income tax return and tries to link the assessee's creditworthiness to the amount of income disclosed in the return for that year with the amount just come in the books of accounts. Now, this kind of linkage, to my humble mind, does not overuse certain critical facts of the entire situation. Now, the amount lent could not necessarily be out of the income of the current year. It could be out of the reserves accumulated over a period of time. It did not necessarily be by income. It could be my reserves built up over a period of time. In case of the company, it could be my share capital raised at various points of time. It could also be out of borrowings. Nothing prohibits me, subject to compliance with the provisions of the Companies Act, to lend money out of my borrowings. So a mere trying to develop a linkage between the income tax return by ignoring other relevant factors of the case, including the fact that the person may be a high net worth individual, person of means, otherwise he could have inherited the amounts. So that is somehow not, to my mind, in the fitness of things. The third critical limb in this case is the genuineness of the transaction. The genuineness in this connection would mean, I hope I'm not running out of time, I'm behind, but let's see. The genuineness of the transaction in this regard would mean that the basic subterfuge of the transaction, the entire basis, cannot be brought to question in any manner. It is compliant with all laws. What appears is actually the underlying situation. This doctrine of preponderance of probabilities and substance over form plays a part here, not to the extent as the department would like to believe, but yes, some part of it. So but where the transaction has been taken place through banking channels, recorded in the books of accounts of all the parties, duly confirmed by all of them, there's nothing contravention of any law It is duly documented, perhaps by loan agreements. So that would all go on to prove the genuineness of the transaction. And again, genuineness of the transaction would fall in many cases from the identity of the borrower, of the cash creditor, as well as the credit worthiness. So it's kind of linked to the all three, to the other two factor which discharge lead to the discharge of owners under Section 68. Now, as I mentioned earlier, I've already kind of discussed these various issues. All the three components, the three limbs of the owners have to be discharged cumulatively. Again, various you can't consider each factor in isolation. Various factors are interlinked and have to be discussed conjointly. The onus to prove that the apparent is also real, that substance is also the form is also the substance, that the preponderance of probabilities applies in favor of the assessee is also a critical factor. And of course, the manner in which the assessee has sought to discharge the onus can be supplemented by the assessing officer by making independent inquiries as he may deem fit. No, in my limited experience with the department, I've kind of come across various parameters, various issues which the department generally relies upon to determine creditworthiness, genuineness, and which it regards as indicator that the transaction is not genuine, or the creditworthiness of the depositor is not proved. I'll deal with some of them. There is, in many cases, there's a frequent movement of funds in the bank accounts. So there is a credit on one date, and maybe on the same day there is a debit, or on the very next day there is a debit of an equivalent amount or a sizable portion of that amount. Now the department, in all its wisdom, invariably goes on to say that these kind of transactions do not support creditworthiness, and the nature of the bank account and the nature of the transaction is that of a typical accommodation entry provider. Now, how the department is able to come to such a conclusion is again a matter of conjecture. What is a typical accommodation entry provider? Nowhere defined in the Act. I have searched reams of case laws. There is nowhere there. So, how is simple a credit and a debit in quick succession of each other an indicator of the lack of creditworthiness, or to prove the genuineness, disprove the genuineness of the transaction. On the contrary, it's open for further debate. I would tend to think that which businessman would like to have his funds resting idle in his bank account for even more than the minimum time? It would require efficient, out of the box thinking, clear-cut thinking, rational thinking, that as soon as funds are available, I have proceeded to deploy them for the purposes for which I thought they would be used, which will lead me to earn some income in the immediate, medium, or long term, whether by dividend, interest, or long-term appreciation. So these two, what are the characteristics of a shell company accommodation entry provider and frequent movement of funds? The other is there's a low turnover of the company and it does not have a fixed assets base. Now here again, what critical factor that is overlooked is that many companies do not need any major fixed assets to operate a business. The quantum of fixed assets, the composition of its balance sheet is dependent on the nature of its business and also the manner in which the management feels that it's best position to carry out its activities in whichever field that they may be desiring to. So low fixed assets base is essentially not a criteria to disprove creditworthiness. No business, again, it's a moot question. What is the meaning of no business? Low turnover in case of an investment company, in a finance company. Turnover is defined not by what is credited to the profit and loss account, but by the nature of the quantum of loans and advances and investments. Main objects, as per memorandum, not carried out. Here again, the department seeks to step into the shoes of the business and to determine what is the correct, to determine commercial expediency and the business prudence of any activity. The company was incorporated to a specific purpose. The promoter decided later on that they did not foresee any future in that business. They postponed the idea. They went into an alternate line of business and issue of share at a premium. Again, issue of share at a
Excuse me, sir. Sorry to interrupt in between. Sir, one of the member, Mr. Sanjeeva Bhandari, has raised his hand. I think he has certain query. I request before the technical advisor to unmute him and let him speak and ask the question.
And I may just add that in case any other member wishes to add on to what I have said, supplement it or have a difference of opinion, that will be the perfect setting for a fruitful professional discussion. Yeah.
Hello.
Yeah. Good afternoon.
Am I audible, sir?
Yeah. Good afternoon.
Sir, as per provisions of 68, as you have also earlier said about 3 limbs, my question is about how to prove genuineness of transaction, as burden to prove is always on the assessee. ठीक है सर? आपने अभी बताया और लॉ में भी है, 68 में भी है कि अगर कोई क्रेडिट ट्रांजैक्शन आइदर थ्रू कैश और बैंक और चेक, अगर कोई क्रेडिट ट्रांजैक्शन हुई है तो उसको जेन्युइननेस के लिए क्रेडिटर की आइडेंटिटी, सोर्स ऑफ, ठीक है सर, सोर्स ऑफ पेमेंट, ये होने जरूरी है। मेरा क्वेश्चन ये है कि इवन मान लो कोई क्लाइंट है, बिजनेसमैन है, वो बिजनेस कर रहा है, पंजाब में बिजनेस कर रहा है सर, ट्रेडर है, उसने कोई बिजनेस शुरू किया है और उसकी सेल एज पर जीएसटी सीजीएसटी एक्ट 20 लाख से कम है, 40 लाख से कम है, ठीक है सर। तो वो छोटे छोटे जो व्यापारी होते हैं, रेट फड़ी वाले, आजकल क्या होता है, जो छोटी मंडियां है ना लुधियाना में बहुत है, वहां पर व्यापारी आता है बाहर से, मतलब कि पंजाब से किसी भी शहर से आ जाता है, माल 10, 20, 30 हजार, 50 हजार का लेकर चला जाता है, ठीक है सर। बदले में क्या देता है, ज्यादा से ज्यादा वो अपना आधार कार्ड, जो ट्रेडर भी है वो भी इतना अवेयर नहीं होता क्योंकि उसने जीएसटी में भी रजिस्टर नहीं किया होता सर, ठीक है, तो वो आधार कार्ड दे जाता है ज्यादा से ज्यादा, तो 20-30 हजार एडवांस देता है, बाद में बाकी पेमेंट उसके अकाउंट में डाल देता है, ठीक है सर। उसके अकाउंट में ट्रांजैक्शंस आ रही हैं, क्रेडिट ट्रांजैक्शंस हो रही हैं, ठीक है सर। अब वो जेन्युइन है इन द सेंस में वो बिजनेस कर रहा है, 20 लाख 30 लाख 20 लाख उसके अकाउंट में आ गया, 10 लाख से ऊपर कैश, और तो उसने आईटीआर भी फाइल कर दी है। मैं एक और स्टेप आगे जा रहा हूं, उसने आईटीआर 4 सुगम में फाइल कर दी है, 44 एडी में, जहां बुक्स ऑफ अकाउंट की जरूरत ही नहीं है, ठीक है सर। तो
आई थिंक वी लॉस्ट यू।
सेक्शन 40, ठीक है सर। तो इस केस में वो अपने तरीके से सही जा रहा है, अभी मैंने अपना शो कर दिया, सब कुछ कर दिया, कल को असेसिंग ऑफिसर मान लो 148 में केस ओपन कर लेता है, ठीक है सर, वो कहता है नहीं जी हम नहीं इसको एग्री करते, आपकी तो ये अनएक्सप्लेन्ड इनकम है, मैं इसकी जेन्युइननेस शो करो, वो कहेगा सर मेरा जेन्युइन है, मेरे पास पार्टियों का आधार है, वो कहेगा क्रेडिटर का सोर्स बताओ, क्रेडिटर सोर्स अब वो कैसे बताएगा सर, छोटे छोटे व्यापारी आ रहे हैं, माल उठा के ले गए, तो उसका वो छोटे जो व्यापारी हैं वो भी कोई 2 लाख 4 लाख की सेल करता है, 5 लाख की सेल करता है, उनके भी नंबर नहीं होते मोस्टली, उन्होंने भी रजिस्ट्रेशन नहीं कराई होती जीएसटी वगैरह में, तो उसको ना बुक्स मेंटेन की होती हैं, मोस्टली यही होता है ना सर। तो इस केस में बहुत मुश्किल हो जाएगा जेन्युइननेस प्रूव करना, जो इट्स वेरी हार्ड ऑन बिहाफ ऑफ द एसएससी टू प्रूव। इवन वो कहेगा कि अगर वो प्लीज लेगा कि सर मैंने तो आईटीआर फाइल किया, असेसिंग ऑफिसर कहेगा मैं नहीं मानता जी, मैं तो 115 बीबी में आपको इसके लूंगा भी, आपने टर्न फाइल कर दी, फिर भी आपको 78% देना पड़ेगा सर, ठीक है ना। तो इसका क्या सोल्यूशन है सर, काइंडली एनलाइटन ऑन दिस इशू, इसको जेन्युइननेस को कैसे प्रूव किया जाए, हाउ टू सेटिस्फाई द असेसिंग ऑफिसर कि ये भैया ये जेन्युइन है, ये ऐसा काम होता है, मोडस ऑपरेंडी है ये, इसको कैसे करें?
I think your query is clear. Let him answer now, Sanjeev ji.
जी sir.
In this case, what we are talking of is not cash credit, but we are talking of an advance against sale or sale receipts. We are
नहीं
not
सर, कैश क्रेडिट्स नो सर, यू डिड नॉट फॉलो माय पॉइंट। कैश क्रेडिट्स तो है ही सर, जैसे वो माल ले गया 5-10 हजार दे गया, बाद में बाकी पेमेंट उसके अकाउंट में डायरेक्ट जमा करा देता है, वो कैश ही हो गया ना सर, वो या उसने चेक लगा दिए, मतलब क्रेडिट्स हुए हैं, चाहे कैश हुए चाहे इवन वो 68 में ही आएगा सर। वो मेरे से माल ले गया 50 हजार का, मुझे 5-10 हजार दे गया, बाकी कहता सर मैं आपके अकाउंट में डाल दूंगा, अगले दिन उसने मेरे अकाउंट में 10 हजार डाल दिया, सीधा कैश डिपॉजिट कर दिया, मेरे से अकाउंट नंबर ले लिया, फिर अगले दिन उसने 10 हजार और डाल दिया, 20 हजार और डाल दिया, ऐसे मेरे अकाउंट में ऐसे क्रेडिट पेमेंट्स आ रही हैं।
Bhandari sir, I am sorry to intervene. He has understood your query. Let him explain. If
Okay.
after explanation you are not satisfied, then you should intervene.
Okay, sir.
Sanjeeva, kindly, please.
You see, what I understand is, in this case, the deposits are against either as against sale proceeds or as an advance against sale. So, which are
Yes, sir.
correspondingly matched by entering the P&L account against sales. So, these are not in the nature of cash credits as understood by section 68. That should be our primary line of action. But AO could still take a view that these are cash credits since आपने इसको नहीं दिया. So that is a matter of dispute. So in this case, whatever best is possible under the circumstances, whatever evidence can be prepared, that would depend on the facts and circumstances of the case. What you can ask from the your customer. He is basically your customer who is buying your goods. He is not your lender, or he is not your investor. Number two, in this case, again, section 269 SS will come into play. If you are bringing it under the purview of section 68, and if you are saying cash de jata hai, तो 20,000 से ज़्यादा, तो section 269 SS would come into play. So that would also need to be seen. So that is, I mean, again, it will depend on the facts of the case. I don't have any real straightforward answer to your query, but getting into वही क्वेश्चन हो गया कि आपने आईटीआर दे दीजिए तो 4480 में फाइल्ड है, उससे क्रेडिट वर्थिनेस प्रूव नहीं होती.
जी सर, जैसे आपने कहा प्रॉफिट एंड लॉस से टैली करेगा, तो प्रॉफिट एंड लॉस तो वो मेंटेन ही नहीं कर रहा 4480 में, तो टैली कहां से करवाएगा वो? पहला क्वेश्चन तो ये आ जाता है.
प्राइमा फिशरी तो मेरा ओपिनियन ये है कि जो आप क्रेडिट की बात कर रहे हो 68 से नहीं होगा, बिकॉज़ इट इज अ सेल. यू विल हैव, इट इज अ सेल, इट इज नॉट अ कैश क्रेडिट हिट बाय सेक्शन 68. So that is it, but maybe I can deliberate it on further and discuss with you maybe later on, and इसको सोचा जा सकता है. I have not frankly dealt with this kind of situation right now, but maybe I am not able to understand clearly, maybe we could have a one-to-one conversation lately with me or Ashwini, and then we can kind of
ठीक है सर,
later on.
ठीक है सर,
thank you sir.
Now, we discussed the various components of the discharge of onus, and in the manner what the departments view in this regard. Thereafter, I'll take you through some judicial developments in the context of the discharge of onus. Now, it has been held across various judgments which are listed below, wherein, in fact, in certain cases, the SLPs filed by the department have been dismissed by the Supreme Court. That if the assessing officer harbors any doubts, if he has any issue with respect to the the explanation furnished or the quality of the evidence furnished by the AO, by the assessee, he is empowered to carry out a thorough investigation. He has sufficient powers at his command by virtue of the provision of the Act. As I mentioned, section 131, or sending inspectors, carrying out a physical inspection, physical investigation, issuing commissions where the distance is beyond the prescribed limit. So he can carry out thorough investigation. But again, in case he desires to resort to an addition under section 68, he has to clear cut, secondly, and in a unequivocal way, prove that the explanation given by the assessee is not satisfactory, and he cannot merely resort to suspicions to treat subscribed capital as unexplained cash credit. Now, this again, reasonableness of discharge of onus I already talked about earlier. So these 2-3 issues form the crux of the judicial view as called out in various judgments. The Stellar Investment, Delhi High Court, wherein the SLP was dismissed by the Supreme Court. Lovely Exports, that is something which is wherein the High Court held that if the assessing officers harbors any doubt on the legitimacy of any subscription, he is empowered to carry out thorough investigation. But if he fails to unearth any wrong or illegal dealings, he cannot just rely on suspicions and treat the subscribed capital as the undisclosed income of the assessee. In this case, although the SLP filed by the department was dismissed by the Supreme Court, of course, there is a certain change, a nuanced change in the law relating to source of source. So there are certain other judgments which have followed this line of thinking, which I have listed below, including Kamdhenu and Expo Globe. Again, the need is talking about preponderance of test of human probabilities, and which is also related to substance over form, which we'll talk about in later date. The department frequently relies upon the circumstances of the case, whether the evidence furnished, whether the entire gamut of transactions, whether the factual position would fall true in the fall. I mean, it reflects the thinking of a genuine person and would pass through the test of human probabilities. That is, a rational person acting in a rational frame of mind, in a reasonable frame of mind, would resort to that kind of a decision, so that to justify the nature of the transaction. Merely resorting to suspicion cannot be the basis for any additional conclusion. The need is for the department to weigh the entire, to overview the entire circumstance factors of the case, and then arrive at a balanced, reasonable, and rational decision, and not just mere conjectures and surmises. So, department generally relies on, if you read about all irrespective all cases across the country wherein additions under Section 68 have been resorted to, they would rely on preponderance of human probabilities in the test of human probabilities as laid out by the Supreme Court in Durga Prasad More and Sumati Dayal. Now, again, in both these cases, the Supreme Court, the honorable judges of the Supreme Court have emphasized on the test of human probabilities, but again, they have again sought to say that it has to be, applied in a reasonable, rational, and nuanced manner, and not just in a off the cuff and casual manner. So in the case of in the favor of the SAC, there are various judgments wherein the test of reasonableness, while applying the doctrine of preponderance and test of human probabilities, are to be applied, wherein it is again and again emphasized that while kind of disregarding the factual position, relying upon probabilities, what would a rational man do in this kind of a situation, the need for the case of the department to be ironclad, to have concrete and evidence is necessary. It can't rely on just constructive and circumstantial evidence. As I already mentioned, for disregarding the case of the SSC, by disregarding the factual position, the whatever evidences have been furnished, whatever the results of the investigation carried out by the AOR, and to dub it as a kind of a camouflage, or as it does not represent the actual state of affairs, the need is for the evidence to be clear-cut and absolutely irrefutable. Again, the distinction as formulated by the Honorable Supreme Court in the McDowell case between tax planning, tax avoidance, and tax evasion the distinction is quite nuanced, but it's again quite clear cut. So the varying degrees of acceptability, legitimate tax planning cannot have any kind of negative repercussions or negative view from the department. A tax avoidance and tax evasion more or less on the same footing, but tax avoidance is somewhat of a lesser degree of a negativity than tax evasion. So this distinction was laid out by the Supreme Court in the case of McDowell, but of course it was subsequently toned down substantially, starting with Azadi Bachao Andolon in 2003, wherein the Supreme Court, in the context of the Mauritius Indo-Tax Treaty, gave some very, very topical and very nuanced observations, and which have been subsequently held. Indirect transfer of assets outside India in the case of Vodafone International, and by various which views have been accepted in varying degrees by high courts and tribunals across the country. So wherever the substratum of a transaction is thought to be kind of disregarded or ignored, it is necessary that for the department to follow a very ironclad and a strict approach. It can't just rely on appearances and preordained frame of mind to judge to dub a transaction illegal. I mentioned earlier, and I have quote in the case of Kamdhenu Vyapar, assessee can suo moto also seek the assistance of provision of section 131 for the purpose of further justifying his case. He can ask the assessing officer. He can regret his inability to personally produce. There can be varying reasons why he's unable to produce the investor or the cash creditor. So he can ask the assessing officer to use the powers bestowed on him by the act to enforce the attendance of a third party. Even otherwise, the inability of the assessee of the borrower or the investee company of the investee assessee not to produce personally the investor or the lender, or his failure to respond to summons under section 131 might be another enabling factor to arrive at an adverse solution, but can by itself not be a ground for making an addition. A third party over whom the assessee normally has only moral control. He does not have any statutory control. He does not have any kind of right over him to enforce him to apply, to reply to a summon or to personally appear. He could have his own reasons for not doing so. So in the absence of the compliance by a third party, that cannot be held against me, against the assessee, that this so party has not appeared, so I am arriving at an adverse conclusion. All these judgments is laid down the principle of which I've already discussed earlier, that assessee can seek the assistance of the assessing officer in carrying out inquiries. The assessing officer independently can make inquiries. Of course, if there's anything adverse, he will have to share the results of thereof with the assessee, and he again is duty bound. The Delhi High Court in the case of divine leasing to carry out any investigations. In case he cannot simply reject the explanation of the assessee. He would need to bolster his case by some kind of additional evidence to say that he does not rely on the evidence furnished or the explanations provided, but he has certain additional reasons to not being able to do so. So far, we've talked about the charging provision, the main section 68, which casts a burden on the assessee to discharge owners, and circumstances in which the cash credits can be deemed to be the income of an assessee. Now there are now there are three very significant provisos to section 68. Now, if the act is passed in its form with respect to section 68, it will have three provisos. Now, the various judicial fora had earlier held that in case I have some credit in my books of accounts, I have to prove the credit worthiness, the discharge owners with respect to my immediate cash creditor. That is the person who has lent me money, and no further. I cannot be asked to prove the source of how that third person got the money, from where it is sourced, what kind of funds did he have access to. But I've listed down those judgments subsequently. But I'll go to the next slide first. The proviso was first amended by the Finance Act to 2012 to provide that where any amount credited consists of share capital and share premium or any other such name, the onus on the assessee shall extend to proving this source in the hands of the person from whom that amount has been received. So the assessee is also required to furnish a person with respect to residents in whose credit that amount is recorded, meaning thereby the onus to discharge source or the extended vis-a-vis the share capital and share premium received by the assessee. But this onus is further proposed to be extended by the Finance Act 2022 with respect to loans or borrowings or any other amount by whatever name called. Now, earlier on, this onus applied only to share capital, share premium, or share application money. Now, it is supposed to apply to loans or borrowings. Now, the change might sound very innocuous and very simple, but it has very far-reaching implications. Share capital is something which is amount is invested in the company, which becomes a part of the invested capital in the company for all times to come. So it's a one-time, kind of a transaction. But a loan or a borrowing essentially comes with a liability to repay that amount as per the terms of the agreement. It is essentially a borrower-lending relationship. So I have a liability to repay. And so in that context, asking me to prove the source of source in the hands of the third party casts quite an onerous responsibility, and assessees would have to be very wary, with respect to the persons from whom they are taking loans. Secondly, this amendment is very wide. It applies to all loans or borrowings by whatever name called, of course, subject to certain exception in the proviso relating to venture capital funds or similar such things, where that institution is subject to regulatory discourse in its own manner. Given that, if I take a loan from my relative, a family member, a business associate, an NBFC, or any other company, I would be required to prove the source of source. To what extent this kind of onus is feasible, what extent it is justifiable, what extent it meets the end of justice is something which requires further deliberation, especially in the context that a loan is a liability. It sooner or later has to be repaid. So where is the question of asking me to prove the source of source? So that is something we need to deliberate and maybe take it up at some level. I already talked about what the circumstances in which the provisos to relating source of source shall not apply. I mentioned about up to assessment year 13, 14 source of source are not required to be proved. These are 4 or 5 judgments which clearly laid that down.
संजीवा जी, ये जो 68 की जो अमेंडमेंट आई है,
हाँ जी,
आई थिंक ये जो वर्डिंग है ना, जरा एक स्लाइड बैक करना, it is related next. It is related to loan and borrowing or any such amount by whatever name called. Meaning thereby whether the creditors in the normal course of business will it be required, will it also require the source of source to be proved?
No, yeah.
Like in GST, by claiming ITC extra, they get it to 2, 3, 4 steps. But I don't think this sort of concept is there in section 68 also, because it is only a loan or borrowing or any such amount, or any such amount means of the nature of loan or borrowing.
Yes.
I think that should be covered, not the advance which Mr. Sanjeev Bhandari was asking, the advance received against sale. I think that may not be covered, but if the advance received is in the nature of loan, we have received advance today and we are not selling it for 6 months, 7 months or 10 months, or even after the end of the season, then that amount of advance may be in the nature of loan, which may be covered under section 68.
So,
may I, Subhash ji, may I also say a few words on this?
Sure, sir, sure, yes, sir.
I think whatever you are saying is perfectly correct. That such which are in the nature of trade creditors, that this explanation will not apply to that. It says loan or borrowing or any such amount by whatever name called. So it has to be in the nature of a loan or borrowing. I think what Mr. Sanjeev Bhandari was saying, to that in any case, neither the earlier section nor this section or not this proviso will apply, because that is that I have made sales and the person is sent, that is purely a case of trade creditor, wherein I make credit sales and the person sends me by cash or by section 269 as applicability is a separate matter. But when we are discussing section 68, that will not apply because that I have already shown as sale in my books of accounts. And if I receive that amount, I am not duty bound to prove the identity of that person because I have already shown that as income. In any case, but as far as this is concerned, this proviso, this is very hard hitting. I had, in fact, mentioned it during the course of our budget discussion also, when we were discussing this provision.
Yes, sir.
In every city or in every trade, I say in particular, let us take the case of Ludhiana, where we are dealing with hosiery, which is a seasonal item. Every hosiery manufacturer has to borrow some money during the peak season, that is from the months of June to, let us say, October, when they are in the process of manufacturing and storing, because they have to gather all that stock, and then the supply starts in the month of September, October. After that, they start getting the realizations. So for that temporary period, they have to seek some loans. And you all would have seen in practical life that in all cases of this hosiery industry, for 6 months they borrow money and for balance 6 months they lend money. So in those cases, this provision will hit very hard. And that is a practical difficulty. I had even suggested that at the bar level, while sending a memorandum of suggestions, we must include this.
Sure.
That's all I thought I will just say on this issue.
Right, sir. Thank you, sir. Thank you.
Yeah.
Yes, sir. Sanjeev ji.
सर इसमें मेरी है क्वेरी, सबमिशन है सर, इसके ना दो एस्पेक्ट्स और भी हैं जो वर्थ डिस्कशन हैं। एक तो सर ये है कि बेसिकली सोर्स की डेफिनेशन क्या है। हम कहते हैं कि ए इज अ पर्सन, उसने बी को दिया, बी ने सी को दिया, ऐसे 7 जगह पे ट्रांजैक्शन घूम गई। 7वीं जगह पे जाके असेसिंग ऑफिसर ये पूछता है कि भाई आपको पैसा कहाँ से आया। उसने छठे का रेफरेंस देके सोर्स एस्टेब्लिश कर दिया, छठे ने 5वें का रेफरेंस दिया तो सोर्स ऑफ सोर्स उसने एस्टेब्लिश कर दिया। क्या हम ये कह सकते हैं कि अगर कंड्यूट से, जो रास्ते से कंड्यूट ए से लेके 7वें हेड तक गए, वो सारे बेसिकली कंड्यूट थे या रियल सोर्स थे? एक तो क्वेश्चन ये है, इट इज रेलिवेंट बाय यू सी, अगर ए से यहां से ट्रांजैक्शन बैड थी और दैट मनी वाज नॉट गुड मनी और वो ठीक ढंग से नहीं था, तो रूटिंग के बाद एंड पे जाके वो ठीक कैसे हो सकता अगर ट्रांजैक्शंस रास्ते में ठीक नहीं थी? तो दूसरी बात ये है कि अगर हम ये मान लेते हैं कि जी उसने तो 2 स्टेप्स तक सोर्स को एस्टेब्लिश करना है बस, इसका मतलब तो ये है कि डिपार्टमेंट ने खुद अपने आप को ही बांध दिया कि सिर्फ 2 स्टेप तक आपने सोर्स ऑफ सोर्स को करना है और अदरवाइज नहीं करना है। तो ये तो बात समझ आने वाली लगती नहीं। दूसरी बात, जो दूसरा इसका एस्पेक्ट है वो ये है कि कोई भी ऐसी जिम्मेवारी डिपार्टमेंट मेरे ऊपर कैसे असेसी के ऊपर लगा सकता है जो उसका बेसिकली राइट ही नहीं है दूसरे से इंफॉर्मेशन मांगने का। सपोजिंग आज मैं किसी से कोई बोरोइंग करने जाता हूँ, उसे कहता हूँ भाई मुझे 5 लाख रुपए चाहिए, वो उससे पहले मैं उसको ये पूछूं कि भाई तेरी क्रेडिबिलिटी है कि नहीं है, तेरे पास ये प्रॉपर है कि नहीं है, ये कहां से बात हो, इनकम टैक्स की रिटर्न दिखाओ, ऑडिटेड फाइनेंशियल स्टेटमेंट दिखाओ, उस एंगल से भी ये बात कहीं टिकती नहीं है। तो मेरा अपना पर्सनल व्यू पॉइंट ये बनता है कि बेसिकली जो लॉ पहले है वो बाद में भी वही रहेगा कि अगर मैं आइडेंटिटी उसकी पर्सन की प्रूव कर देता हूं कि भाई मैंने इससे लिया और ये मेरी जेन्युइन ट्रांजैक्शन थी, इसके बाद नाउ बॉल इज इन योर कोर्ट, आप इसे देखो असेसिंग ऑफिसर, उसको जो मेरी हेल्प की जरूरत होगी, कॉपरेशन की जरूरत होगी, मैं वहां पे कॉपरेशन आपको करूंगा। ये इवन आफ्टर दिस अमेंडमेंट दे कैन नॉट कंपेल मी कि आप सोर्स का सोर्स, उसका पिछला सोर्स, ऐसे कहां तक वो चलेंगे? दिस इज बियॉन्ड अंडरस्टैंडिंग। प्रैक्टिकल डिफिकल्टीज हैं, वो तो सोर्स की डिफिकल्टी तो एक अलग बात है, सोर्स की भी डिफिकल्टी है कि जिससे मैंने बोरो किया है मैं उसका सोर्स भी कैसे एस्टेब्लिश करूं। So that is my submission, sir.
कौशल साहब, आपने बात तो बिल्कुल ठीक कही, बट ये आई एम सॉरी, इमोशनली तो ये बात बिल्कुल ठीक है जो आप कह रहे हो, इसमें देयर कैन बी नो टू ओपिनियंस, बट if that was to be the situation, then why was there any need to make this amendment?
सर ऐसे तो कई
Once they have made this amendment, the assessing officers will be heavy on the while framing the assessments.
Yes.
They will create lot of problems, and I am sure assessees or we people will have a very tough time. Ultimately, what happens in the courts, that is a different matter. Because to say that the intention will remain the same as was the earlier one, then what was the need to make this amendment?
Sir,
it is very, I think, very important as a bar association to make a representation on this count at this point of time. Maybe we succeed, maybe we do not succeed, but I think it is very important to make a representation.
Rajiv ji, we will have a discussion on this issue itself, and then we will make proper all the factors will be taken into account and make a representation.
ठीक है जी, ठीक है sir, thank you.
So yes, as Ashwini ji said, this casts a very onerous responsibility on the SSC. So that is something which we'll need to deliberate. So I think we could go ahead. So just to clarify that these amendments, since they are substantive, they cast an additional onus on the SSC, and they can't be merely be said to be clarificatory. They operate prospectively from the date as mentioned in the relevant finance act. So I mean, with assessment year 13-14 and assessment year 23-24 onwards, the relevant provisos will come into play. This has been very clearly laid out by the Supreme Court in the two judgments which I have cited here. I think one of my worthy colleagues already talked about section 115 BBE and the taxability of unexplained cash credits. I won't spend too much of time over it, just to say that any of the deemed incomes as mentioned in the family of 6 sections which I alluded to earlier, including for the purpose of discussion and our discussion under section 68, which either may have declared suo motu in my return of income, or which may have been added by the assessing officer, would be liable to tax at the rate of 60% plus the applicable surcharge or cess, and no deduction of any expenditure or any allowance or set off of any loss would be allowed therein, meaning thereby that any income under this family of sections would be chargeable separately on a standalone basis at the rate of 60%. And this section applies prospectively from assessment year 17-18 onwards. And again, there are 2 judgments of the Rajasthan and the Delhi tribunal, wherein this again has been held that the amendment that no setup of loss shall apply only prospectively. Again, it is something which is clear, because these is kind of a further liability and obligation with respect to an SSC. So it can't be said to be merely clarificatory in nature. I talked earlier about levy of penalty vis-a-vis section 68, and in addition under section 68 not being suo motu the basis for a levy of penalty under the erstwhile section 271(1)(c). Now, with effect from assessment year 17-18, consequent upon the introduction of these specified special taxation provisions with respect to deemed incomes, especially under section 68, penalty is leviable at the rate of 10% of the tax payable under section 15 BBE, which comes to an effective rate of 6% of the amount of the tax. And of course, no penalty would be leviable where the 115 BBE comes into play on account of a voluntary disclosure made by the assessee in his return of income. The provision of section 270A, that is understatement of income, misreporting of income, would not apply in such cases. And provision of section 274, that is procedure and limitation, would apply. A question that arises is that section 273A permits an assessing officer not to levy penalty in certain cases wherein there is a reasonable cause, wherein he is of the opinion that the reasonable cause for the default. This section 271 AAC does not figure in the list of sections 273A, which wherein penalty can be levied on, can be mitigated on the existence of a reasonable cause. So there seems to be a disconnect because the wording of the section is penalty. This says that penalty may be levied, but there is no provision under section 273 whereby the assessing officer can say that there is a reasonable cause, and so penalty cannot be levied under section 271 AAC. Moving on, I'd like to take us through certain recent judicial pronouncements of interest on this issue. There was a sea change in the judicial view on taxability of amounts under section 68 by virtue of the decision of the Supreme Court in the case of NRA Iron and Steel Limited. The facts of the case were that the company had received certain amounts by way of share capital. It discharged its primary owners, gave all the relevant documentation that were humanly and possible by virtue of being a due diligent taxpayer. The assessing officer did some on-field inquiries where the several investors companies were found to be non-existent, and held that the owners to establish identity of the investor companies was duly discharged by the assessee, was not discharged by the assessee. So he proceeded to make an addition. Starting with the CIT appeals, it was held that the lender companies are separate companies. They are governed by a separate entire statutory dispensation. So assessee had fulfilled not only its primary but its substantive owners by furnishing all the relevant information. So the CIT appeal, ITAT relying upon the CIT appeal order, granted relief to the assessee company, and the decision was deleted. The High Court also dismissed the writ petition filed by the assessee. But when the matter traveled up to the Supreme Court and an SLP was filed on behalf of the department, the entire scenario was reversed, and the order of the assessing officer was upheld. That since the authorities below, the various levels of the appellate hierarchy, had not adverted to the field inquiries conducted by the assessing officer, the addition could be sustained, and that the assessee company had not been able to discharge its owners. Now, it laid down certain requirements that in the specific facts of the case, that there was specific evidence that the assessee the investor companies were not found to be non-existent. They could not be located at the address, and there was an adverse field report. The addition was sustained. But subsequent to that, the matters, there are certain other judgments of the Supreme Court as well, wherein the issue has been discussed further and, may I say, somewhat diluted. In the case of Aditya Birla Telecom Limited, there was a huge investment running into about 2,000 crores by a Mauritius-based company in Aditya Birla Telecom Limited, for which preference shares at 0.00001 coupon rate were issued. An amount of almost 2,100 crores, of which the share capital was about a paltry 2 crores, and a share premium of 2,096 crores, issued at a premium of 0.0001% preference coupon rate preference shares. All the necessary approvals had been taken. The matter was approved by SEBI, the regulatory authorities, RBI, and money was received. The assessee company only used an insignificant 7.5 crores out of the said amount for its own operation, and invested that money in various other companies on a long-term basis, no immediate return, in the hope of long-term capital appreciation. The OAO held the investment to be non-genuine, disregarding the various approvals, the strict regulatory process, and held it to be a colorable transactions. The Commissioner of Appeals upheld the addition, deleted by the ITAT. High Court held that merely because the investment was considerably large and there was a corporate structure, a complicated corporate structure which had come into play, it could not be sufficient to brand the transaction as a colorable device. So So merely the fact that the investor company would not receive any income in the immediate scenario, nor in the proximate future scenario. It was only a long-term investment whereby the prospect of earning any dividend was as held by the High Court. It was a part of the natural process. It was a part of the natural risk-taking ability of the investor. So it held it was not a colorable device and proceeded to delete the edition, and which was the SLP was dismissed by the Supreme Court. Here again, in the case of Orchid Industries, a slightly nuanced view has been taken, differentiating from NRA, Supreme Court in the case of NRA. SSC here had produced all documents which we reasonably consider which within the realms of human endeavor to establish the genuineness, creditworthiness, and the identity respectively, including PAN, confirmations, bank statements. And the third parties, the investors, they did not appear before the assessing officer. So the High Court held that simply because they did not appear before the assessing officer, it will not negate the case of the SSC so as to attract the mischief of Section 68. So in this case, again, depending on the facts of the case and the peculiar circumstances, the onus of the SSC was said to have been discharged. There was no negative evidence to doubt the quality and the nature of the cash creditors, and so the edition was deleted, and again, in this case, the SLP was dismissed. In the case of a similar case of Amy Industries Limited, recent judgment of the Bombay High Court, a clear-cut finding was returned by the appellate authorities that the SSC had discharged its onus under Section 68. And there was no perversity in the findings of the authorities below. There was not an iota of evidence to disprove the evidences furnished or any fault in the the arguments or the reasoning followed by the authorities below in holding that no addition could be made under Section 68. So the High Court held that Section 68 was not attracted. And lastly, there is a recent judgment, an interesting judgment of Action Global in the case of Action Global in the case of the Delhi High Court. This is rendered as early as about a couple of months back in 2022. It various interesting issues, including cash deposit consequent upon demonetization. But I would simply talk about the conclusion arrived at by the Delhi High Court with respect to Section 68. If by virtue of a chain of transactions, if a company routes its own unaccounted money back to itself, the High Court held that there could be a non-compliance of various other laws. The banks could say that there is a diversion of funds. The other authorities could come into play. But the fact that the money had flown from the SSC company back to itself could not be a ground of Section 68. And pertinently, it held that there is no material on record to establish that any unaccounted money had been generated and that the source of the funds was any unaccounted money. No, the mischief, the perversities of Section 68 do not come into play. So this judgment, it's a fairly lengthy judgment, is of particular relevance whenever we are kind of dealing with Section 68 cases in the years to come, whether at the assessment level or on the various appellate proceedings that we may be privy to. So with that, I think I've taken a fair bit of time of my esteemed members. So in case we have any further issues for discussion or queries, I would like to answer them to the best of my ability. Duly supplemented by all the learned members present here.
Sir, there is
Not supplemented by the assistants.
Sir, there is one query from Madam Megha Kalada. Anshulji, can you unmute Madam Megha Kalada? सर मैं रीड कर देता हूँ क्वेरी उनकी चैट बॉक्स में है. This is with respect to rate under section 115 BBE. So what is the date of applicability of the enhanced rate of 60%, whether it is 15th of December 2016 or it is retrospective from 1st of April 2016, sir?
I think it is applicable from Ashwini ji. Probably you could come into this and.
In fact, the question is related to latest. In case there is any progress or any recent judgment which may have clarified this, whether it is applicable from a prospective or retrospective.
No, I mentioned in the course of my presentation that the provisions relating to set off will apply only prospectively. It has been clarified by the board in its circular and by various judgments. So
related to rate of tax.
Huh?
Related to rate of tax. So, which was amended from
rate of taxes, any change can apply only prospectively. It cannot apply retrospectively.
This Sanjeeva ji, this amendment was brought in on 15th of December 2016, connected
and
with.
It was made applicable for assessment year 17-18.
Yeah. It was made applicable from 17 because it became applicable retrospectively from
1/4/2016.
Yeah. It was amended on 15th of December 16, made applicable from 1/4/16.
Yes. This was in the the demonetization period. This amendment was created and it was made effective from 1/4/16.
The question is whether there is any recent pronouncement on this. I don't think I have not come.
I do not seem to be aware of any.
Yeah.
Any member can raise hand in case there is a query.
Sir, एक query है, तो can I ask sir, Sanjeeva sir?
हाँ जी.
That amendment came into effect from 1/4/17, not from 1/4/16. So 1/4/17 would mean assessment year 17-18 onwards.
Yeah.
So I think it is not 16 to 17. So 17-18 for the, I think the query raised by Megha Kalra, Madam Megha Kalra, is that whether it will apply retrospectively or prospectively. I think they have categorically said. Technically, it may be wrong, because I think government cannot levy a liability from a retrospective date. But unfortunately, this provision has not been challenged before any court, as far as my knowledge goes. And there is no judgment, neither earlier nor any latest judgment on this. So the government or the department is applying this rate from assessment year 17-18 onwards.
Yeah. Sir, there is another query in the query box, that sale consideration received by promoters to new promoters without any agreement to sell, from new promoters without any agreement, but the new promoter very much visible at MCA side. Is AO justified to assess it as unexplained credit? ये query किसकी है? Query clear नहीं है. Old promoters sold.
What is the item which has been sold? And is it the business which has been sold, or shares which have been sold, or it in the normal course of business?
अंशु जी अनम्यूट कर दो अगर आपको पता लग रहा है कौन है, क्योंकि नाम नहीं आ रहा है.
सर वो आईफोन मैंने कोशिश की है, हमको
आईफोन से ये ना पता नहीं लगा.
सर शेयर्स है जी, उन्होंने क्वेरी में लिखा है शेयर्स सेल किए उन्होंने.
So the person is unmute.
Hello.
Sales
Hello.
received. Hello. हाँ जी.
Is it audible?
Yes sir, yes, audible sir.
Yes, the old promoter has sold his majority shareholding to new promoters and transferred the underlying assets.
Old promoters sold his majority shareholding to new promoters.
New promoter.
Okay.
And the assessing officer is asking for agreement, whereas the new promoters are very much visible and they had paid the total consideration through bank.
You see, it is a transaction for sale of shares. It is not a transaction for either loan, borrowing, or either way of share capital. So it is a transaction between two independent parties with respect to sale of a certain item.
Yes.
which would be liable to maybe capital gains tax in the hands of the seller.
No, no, that is not a matter. The assessing officer is saying that if you will
I'm
not
coming to
provide
that.
with
I'm
the
coming to that.
agreement.
So whether section 68 would apply in such a case, this is something similar to sales proceeds, what Mr. Bhandari talked about earlier. Sales proceeds would ipso facto not be hit by section 68 because they are a part of my P&L account. So this transaction between two persons for the sale of a particular good on item for sale of shares, it should not attract section 68. Secondly, an agreement for sale of shares stands duly documented by following the procedure under the Companies Act. The SH7 is to be prepared. It need not necessarily be documented by a written agreement. It can be verbal, of course, recorded in the books of the company by virtue of its secretarial records. That being the case, the absence of a written agreement to sell shares, the written agreement is not necessary in a transaction for sale of shares, because being movable property, it does not require to have any agreement registered. It can be by word of mouth. It can be an oral contract.
May I add, sir?
Yeah.
Sir, where this amount is received on account of sale of stock, where there is no stock at all, then it may be covered under section 68.
Yes.
Sale, receiving money without any stock.
Yeah.
Actually,
yeah.
the company has fixed assets, land and building. Okay, fine.
Is there any query further?
क्वेश्चन साहब एक मेरी क्वेरी है.
हाँ जी बदवा जी.
संजीवा सर,
मेरे यहाँ पे क्यों फर्क गया? क्योंकि कारण है मैं बेसिक.
Hello.
Sanjeeva sir, I think my voice is audible.
Yes.
सर सेक्शन 68 में जैसे हमने अभी देखा कि जो भी एडिशंस हैं वो डिपार्टमेंट की तरफ से प्रपोज की जाती हैं. अब मान लीजिए किसी असेसी के अकाउंट में कुछ क्रेडिट एंट्रीज हैं, तो उनकी क्रेडिट वर्दीनेस एज सच प्रूव नहीं की जा सकती, तो असेसी ने उन एंट्रीज को राइट ऑफ करके डायरेक्टली उनको प्रॉफिट एंड लॉस अकाउंट में ले गए. तो ऐसे केसेस में क्या वो स्पेशल रेट अट्रैक्ट करेंगे या वो नॉर्मल कोर्स में जो टैक्स पे कर रहा है दैट इज सफिशिएंट?
You see, it is the nature of the transaction and not what you have recorded in the books of accounts that is important. Which was by nature, by beginning, it was in the nature of a cash credit. So it would attract that the corresponding taxation provisions. The regime would be applicable to it would be that of a cash credit, not as a trading credit. You might have credited to the profit and loss account, but the fact remains that it is a cash credit. So the provision of section 68 and all the relevant the entire gamut, 115 BBE, 271 AFE, they would come into play. To my mind, that is my opinion. Not it will not be treated as a trading credit.
But sometimes sir, कभी ऐसा होता है, मान लीजिए कोई लोन लिया गया, अब वो पर्सन है वो एग्जिस्ट नहीं करता, एक्सपायर हो गया, तो उस केस में उसके बाद उस लोन को क्योंकि कोई उसका क्लेमेंट नहीं है, तो असेसी ने उसको राइट ऑफ करके उसको प्रॉफिट एंड लॉस में ले गया. तो इनिशियली तो वो लोन की कैटेगरी में था एंड इट वाज प्रूव. तो अभी उसकी रीपेमेंट का कुछ नहीं मैकेनिज्म है, तो उसने उसको राइट ऑफ कर दिया. तो ऐसे केसेस में क्या अगेन फिर वो जो नॉर्मल इनकम पर टैक्स दे रहा है, क्या वो सस्टेन करेगा या अगेन 115 BBE अट्रैक्ट होगा?
बड़ा पेक्यूलियर क्वेश्चन है.
May I try to clarify?
Yes, sir. Yes.
Sorry for the interruption. Vadvaji, I think my view on this is that at the time this amount was credited in the books, if at that point of time the query is raised by the assessing officer, then it is a cash credit. Then all provisions of section 68 or 115 BBE will apply. Now let us say I had credited this amount during assessment year 17-18, and that year I explained this credit whenever the query was made. As you said, at that time I could explain, it has been explained. Now, after 3 years, I credit it to my profit and loss account. Then provisions of section 68 will not come into play, because if you read the provisions of section 68, the wording says that where you have credited an amount which you are not able to give us explanation, it is not a question of credit. I have already offered it for taxation. It is no more standing in my balance sheet. So my personal view is that in that year, when I have credited, I have shown it as income, then there is no question of section 68 coming into play. That's my.
Thank you, sir. Thank you.
Moreover, sir, there is another aspect of the same transaction. Now the question is कि whether it is taxable or not taxable. अब आपने 68 में जिसका लोन पहले प्रूव कर दिया और वो उसकी क्रेडिबिलिटी सारा एस्टेब्लिश कर दी, 68 में वो हो गया. अब बाय वर्च्यू ऑफ सेक्शन 56 तो आप उसे टैक्स कर सकते हो, क्योंकि उसमें बेसिकली आ गया कि भाई ठीक है. उसमें भी एक क्वेश्चन है कि वेदर वेवर विल अमाउंट टू द रिसीट ऑफ द मनी इन अ पर्टिकुलर ईयर और नॉट.
सर वेवर तो हुआ नहीं ना वो. नाउ वी डू नॉट नो द पर्सन इज नॉट देयर. हाउ कैन वी से इट इज अ वेवर?
Sir, even if it is a unilateral transaction, we have credited in our accounts.
I think what you have said कि 56 apply हो सकता है, 68 नहीं apply हो सकता.
हाँ, 56 अप्लाई हो सकता है, बट उसमें भी आगे देखना पड़ेगा कि 56 में जब यूनिलेटरली मैंने उसे अपने प्रॉफिट एंड लॉस में क्रेडिट कर लिया है, क्या उसमें फिर आगे एक और क्या वो उसी रिलेशन में है जिससे मैं गिफ्ट ले सकता हूँ कि नहीं. डिफरेंट एंगल से इसको चेक करके हम टैक्सेबिलिटी इसकी देखनी पड़ेगी.
वो तो अपने लोगों की खूबी है ना, हर चीज में कोई ना कोई घुंडी डाल के रखना और निकालना. दैट इज अवर प्रोफेशनल कॉम्पिटेंस, आई शुड से.
I see B.R. Kaushal ji also there. He is General Secretary of Punjab Tax Bar Association. We welcome you, sir. He is also very learned and very active. Sir, you are muted. जय राजीव जी.
हाँ जी. और क्वेरी है किसी मेंबर की या ठीक है.
In case there is no query, I request Sanjeeva Kaushal sir to give his concluding remarks on this.
सर, संजीवा रेड्डी जी ने बहुत इलेबोरेटली और बट इन अ वेरी ल्यूसिड मैनर सारी प्रोविजंस को एक्सप्लेन किया है. कई डिफरेंट एस्पेक्ट्स इसमें दिए हैं which needs to be seen very carefully. My only submission to all the members is कि facts of the each case are independent. किसी भी थ्योरम को कि लवली एक्सपोर्ट्स ने ये कह दिया तो उसे हम ब्लाइंडली अप्लाई कर लें, या एनआरए ने ये कह दिया तो उसको ब्लाइंडली अप्लाई कर लें. एवरी थ्योरम और रेशो जो भी निकलती है किसी जजमेंट में से, वो किसी एक पर्टिकुलर फैक्ट्स के ऊपर होती है. तो हमने अगर अपने फैक्ट्स के ऊपर उसे लगाना है तो आइडेंटिकल उसे देखना पड़ेगा कि हमारे फैक्ट्स उतने उसके आइडेंटिकल सिमिलर है भी कि नहीं. कई बार ये देखा जाता है कि वो जिन सेट ऑफ फैक्ट्स के ऊपर थ्योरम या रेशो दी गई है, हम थ्योरम उठा लेते हैं और डिफरेंट फैक्ट्स के ऊपर लगा देते हैं. सो दैट नीड्स टू बी वेरी केयरफुली डन. 68 सेक्शन बहुत पुराना है, नई नई अमेंडमेंट्स इसमें आ रही हैं. अब तो और भी ज्यादा केयरफुल इसलिए होना पड़ रहा है क्योंकि 115 BBE की बड़े ही ड्रैकोनियन लॉ है और बहुत हाई रेट ऑफ टैक्स. जब तक आपके पास पहुंचता है जिस साल में असेसमेंट, तो लायबिलिटी अप्रोक्सीमेटली 100% से भी क्रॉस कर जाती है इंटरेस्ट डाल के. तो इसमें बहुत ही डिटेल्ड सारी सबमिशंस संजीवा जी ने दी है. वी आर रियली वेरी थैंकफुल टू यू सर. और कई जजमेंट्स जितनी आपने नई हमें दी हैं उसमें से भी हम सारा उसे डिटेल्ड पढ़ने की कोशिश करेंगे सारे. तो आपने बहुत मेहनत करके हमें सारा गागर में सागर भर के दे दिया है. तो वी आर रियली वंस अगेन वेरी थैंकफुल टू यू सर. So I close my submissions on that account. So,
thank you, sir. Thank you, sir. Before the vote of thanks, I will request Sanjeeva sir if he can share his PPT so that our members can be enlightened with that also. After this, I will request our Vice President. After that, I will request our Vice President to propose a vote of thanks for our guest speaker and members.
Thank you, Mohitji. Thank you, Mohitji, for giving me opportunity. At the outset, I would say we are already indebted to Shri Ashwini ji, who is always helping and educated the members of TTBA. Now again, one of the jewel of Messrs. Ashwini and Associates, Shri Sanjeeva Narayan ji, who have delivered on the topic unexplained cash credits under Section 68. Sir, we are rather very thankful to you because there were a lot of confusions, lot of amendments and confusions in this section. After listening to you, much of the clarity is there regarding the section. I will also be thankful to our study circle convener, Shri Rajiv Kaushal ji, for sparing his valuable time in organizing the virtual study circle meet. I am also thankful to Shri Gulshan Wadhwa and Pushpal Soni ji for the support to the study circle. Finally, I would thank all the senior members. I am seeing here Mr. Khurana, Mr. Jasbinder ji, Subhash ji, PC Goyal ji, and many members which I am not able to see now. I am very thankful to them for the wonderful participation and discussions in which members like us are benefited, and we learn a lot from your discussions. We are rather very thankful to all the members who have spared their valuable time. Finally, I thank all the team, Subhash ji and team, who have made the event possible and who have done all the things. Thank you. I would thank Sanjeev Narayan ji once again from the core of heart, and thank you all the members. Thank you.
Thank you, everybody.
Arjun ji, I think we can stop the recording now.
Anji,
Okay, sir.
Mohit ji,